What's up, everybody? Chris Dover here, founder of Pollinate Trading. And today I'm going to go over, this is our weekly review as we get ready to start the week, see what's going on in the markets and generally where we are. So we have a game plan going into the trading week ahead. I often do this as the weekly email. I'll go ahead and do that as well. But let's get a video out there because I haven't done one in a minute. All right, so first thing I want to do is I'm going to go through the Failball breakouts on the dailies. And this is what I like to do right before the beginning of, or right at the end of every trading day. So we know if we have any setups ready to go as the currency markets are going to open up here in a few hours. I wanted to start off right away. Aussie CAD, nothing, but we are in a neutral market regime. So Failball breakouts are ideal in this situation, especially with the CAD pairs. That's our highest win rate and return rate, typically speaking. So in the trading lab, we will be trading hourly and lower timeframes FVBOs with this regime when we find ourselves in this neutral regime. So we got nothing on the CAD. I don't trade the franc at all. We are in Aussie yen, nothing. Aussie Kiwi, nothing. Aussie dollar, nothing. So CAD yen, nothing. Euro Aussie, nothing. Euro CAD, Euro pound, Euro yen, Euro Kiwi, Euro dollar, very high compressed. Interesting to note, very high compressed regime here. And it looks like we closed outside of, if we take off our training wheels here, we got closed outside this level that's been a problem area for the euro for the last little while. We are in bull quiet. We've just blasted up from nowhere and consolidated quite a bit. So this might be an interesting setup for a continued move on the euro going forward, but this isn't a strategy. That's just mildly entertaining information. Nothing on pound, nothing. Okay, pound Kiwi, we are in a neutral regime and we are breaking out of the compressed region. So there is a potential this week that we could have a setup on pound Kiwi in the next couple of days. We'll be keeping an eye on that. I had a request for the pound. The request was, my thoughts on the pound. Let's have a look at where we are on the pound. And one thing I will point out is that this area has been resistance for 2 years or so, year and a half, I guess. So we're right up to the top of that again and bouncing off of it. The thing that's different, well, not different because it happened before back in looks like December of 2019. So a year ago, we were in bull quiet market regime and we made an attempt, and it was a pretty aggressive attempt and flipping into bull volatile rather quickly for obvious reasons. This time though, it looks a little bit more tame. And one thing I want to look at here is on the monthly, how underpriced. Actually, let's do I think this is the one that get us all. Yeah, this will take us all the way back. The pound is at a pretty historic low level. Pound to dollar average spot, I would eyeball it at about the 170, 175 range. And we're trading at the 133 range. And historically speaking, the only reason I bring this up is if we were to look at pretty much every other index, we're going to see that we are trading right. You see everything is kind of right where it has historically been. There's not too much drama. Euro USD, it's kind of right in that middle range. But what we got with the pound is we find ourselves way below that level on a monthly basis, like on a very long-term basis. So I forgot who asked. I'm gonna take a look. Suresh asked about the pound, and look, the likelihood that actually, if we take a look here on the monthly, you can see how non-essential this move really is relative to the big moves. And also, this area here has kind of been support until it broke back in 2016 on Brexit, right? So we're right in this general area where we've been having a lot of work to try to get through it. I would say that there is a decent opportunity that, much like the euro, we could be breaking out of this range and could make a move higher. Now, I'm not taking a bet on, I trade my strategies. I don't, this isn't something that I would take a position on myself until we get something a little more interesting. But, if I pull up my normal strategy, it doesn't have anything. There's nothing showing. We are in a bull quiet. It's been a nice quiet uptrend. So if you are trading this in a price action manner, you've got pretty much every time you have it. What I would be looking at is for this sell setup, this double top pattern it seems to be playing out. I would be looking for that to fail, to get long, kind of how that happened here. Big, ugly sell setup, and then just ate it up slowly, caution, just without any issues. And that's very indicative. This is a very indicative pattern in bull quiet. It just melts up, and then you have a big, ugly sell, and then it just takes it back, and then big, ugly sell, and it fights it back. Big, ugly sells, and it just wears the bears out. And that's one of the big characteristics of a bull quiet, is it's constantly just wearing the bears out. And it's just easy to be long. If you buy down here, if you buy here, anywhere, you can find yourself in a place where it's going to get taken out. So if we are truly in the bull quiet, then it's very useful to be paying attention to the area that we're coming up to here. So not personally taking the trade, love the idea. I'm a big fan of this long-term, getting to the 150, 170 area. I've talked about it numerous times, buying some calls, some 2-year out calls, perhaps, maybe structuring like deep out of the money calls with some long duration, and catching a home run on a small position. That's something I'm going to be looking into on my own. And I just made a note to remind myself to do that. Okay, back to it. Let's get our stuff back on. Okay, last one we looked at was pound. Okay, Kiwi CAD. Now I am, and in the lab, we are long Kiwi CAD. We had, and this is a failed vol breakout that failed and puts in a vol breakout. So we find ourselves up about 1R. We can find these moves to last a good amount of time. And so what I would be looking at is something like these sort of setups, these ugly, bear setups that get defeated, and we just keep moving higher. So I'm long NZDCAD. We are long in the lab NZDCAD on a daily vol breakout. Dollar yen. It's a similar setup, had a vol breakout that got failed, and it's trending up. So Kiwi, generally speaking, as you can see in the dollar, is a very strong pair at the moment. Dollar CAD, bit of weakness, nothing really to see there though. Don't trade the franc. Dollar yen, nothing really interesting. Okay, so we're done with there. Let's head on to the indexes. NASDAQ futures. Personally, I am not trading this in a strategy. This one is price action. And we've nailed this one this year, basically 15 times buying it up through this stuff, exiting right here when I sent out the email and the tweet saying, hey, time to lighten up, time to hedge, time to go short, time to go to cash. Did. This is a 80-something% sell-off move, similar to what we currently have in, as you can see, it's above R3 and we're in bull volatile. That was a very simple giveaway that we were about to get an 8% or greater expected sell-off. And pretty much when we close the month here, that puts us right in that territory. You would put a sell stop below, and we caught it. I went hedged, so I maintained some long position. I hedged it, got short with calls, and that kept me neutral in that position, no problem. And then once that was over, we started seeing the double my troll bottom setup. I love the double bottom troll setup, which is a lower low, a lower high and a lower low in an actual bull market. So a lot of people believe that this thing is going down to 10,000, 5,000, whatever, when you get a lower high and a lower low, but that's not what a troll bottom is. That's my own little setup, but it trolls people into believing that the market is going to continue going lower, but it has characteristics of a bull quiet. So I got long here, got long again, got long a third time, got long a fourth time. That one didn't work out as good, but I have a nice cost basis down in here, came down, had another. So you see all this selling, and you see this really ugly looking sell setup that failed. So I got sucked in long on this one. And then again, last week, I got sucked in long again. So I've got a pretty good cost basis on NASDAQ already. I would expect a flip from the Russell into NASDAQ. And I'll show you why I see that flip, because in the Russell, we have the exact setup that we had in September or August with the NASDAQ. We're closing above R3 on the monthly Fibonacci pivots. We are in a bull volatile regime, which is a requirement for a market top. It doesn't signal a major market top, but it is a requirement for a market top. Coupled with closing above R3, 8 out of 10 times that the monthly close is above R3, we have an 8% sell-off. Those two things line up, and then we have NASDAQ set up to actually perform quite well. As you can see, NASDAQ is well below its R3, unlike it was back in September. We've worked off a lot of the volatility. So my call here is I'm going to look for either to get short Russell or not be long and be long NASDAQ. So I'm already in that position. I'm already not in Russell. And I'm also long NASDAQ. So I could buy puts, I could short Russell, or I could just leave it alone, calling it in the no man's land area. And I'll probably either buy puts or just do nothing with Russell. Same with IWM. So if you're trading the ETFs, that's a fine way to do it here. I had a request for the S&P. S&P's nothing really exciting on the S&P at the moment. Nothing all that interesting for me. Well within the range, bull quiet. I don't like trading the S&P. People think that you have to trade it because it's the market, but you don't have to trade the S&P 500. They're written nowhere that you need to trade the S&P 500. It has basically the least effective return. Like overall, the returns are worse than the NASDAQ. And so I just stay away from S&P 500 trading personally. And we find ourselves in gold. Now, gold has worked off massive bull market, worn it down. They broke below that 1850 level that everybody was paying attention to as we had multiple attempts down to break through it. We find ourselves in a failed vol breakout that got stopped out. Doesn't mean we can't do another troll bottom and come back up. But right now, I'm just not looking at it being too interesting for me. I'm not really messing with it. I own a little bit of gold in a more of a longer term position on the monthly ETF strategy that I run, which is something that I will be releasing here in December. And that's a long-term portfolio that holds ETFs and earns really nice dividends and has some pretty amazing returns. So that's something there. Platinum has, however, moved itself into a bull quiet market. We have ourselves a failed vol breakout that failed, stopped out. That's a vol breakout on platinum with a couple of ugly sell signals that just got face ripped last week, and 3 hammers in a row attempting to stop that out, and trades all the way down to the bottom, rips to the top, all the way to the bottom, rips to the top, all the way to the bottom, rips to the top. I'm expecting a much more bigger move out of this platinum. If you're trading price action, if you're looking for just speculation, this is something that we could see. Let's see, we got 1036 down to 821. So let's call it 200, 1036. So 12,000, 1230 price target is so if I'm trading this one, I'm looking for a move to break above the high of this range here and to hold either this low or this low down in here. So about a 60, 70 point range. But we can break that. We should see a move on platinum, a pretty aggressive move higher quickly up to the 1230 range. I'm going to go ahead and add this one to my list of trades to put on. And then finally, let's get to the Bitcoins. Bitcoin, the price target that I have is, the next price target is 23,910 on a measured move higher. And we do have a VBO 2.0 buy on Saturday. The signal came on, the setup bar came on Friday. The entry came on Saturday. So 17,471, maybe even call it 17,500, depending on what exchange you're looking at. So the trade would be looking at long from there with a stop here. And you're already up about a half hour, but this thing probably, like I said, 23,890, I believe. Yeah, 23,910 is the next measured move higher, and that's substantially higher than the 19,666 or whatever 20,000 level that we're talking about. And from there, I have another measured move into the 35,000 range on Bitcoin, followed into the 6-digit, maybe even 7-digit range. But we had a very nice Thanksgiving holiday sell-off and a VBO 2.0 given to us. I like to look at, when we're trading Bitcoin, I like to look at the 3-day chart as opposed to the 2-day chart. And 36,210 price target on the measured move from the all-time high. So 36,000, 23,000 is our next measured move target, 23.9, so 24,000 more or less. And then 36,000 is our next move after that. That's what I'm looking at on Bitcoin. In 2 days, Ethereum is releasing Ethereum 2.0. A lot of action going on there. We had a good breakout at the 400, 470 area or so. I think when we started to look into get in here, caught some big moves last week. I got trail stopped out on Ethereum over the holidays. The Thanksgiving holiday here in the United States, and would be looking to same sort of setup on a VBO2 back in. Didn't do it myself, but this is the move. So buy stop above 533, so 534 or so. Easily we could see, 1R, 2R, 3R, 4R, we could see sustained moves. Keep in mind that, and a lot of people like to point this out, where Bitcoin is trading at near all-time highs, Ethereum is well off the $1,400, so about 300% move from here, a 3x move from here to get to all-time highs in Ethereum. So certainly not a bad asset to be speculating in if you want a little bit more exposure to crypto. That's it. That's what I got for this week. I want you guys to like the video. I want you to subscribe to the channel. Put your comments down below if you have anything, you got any questions, you want me to test or look at other things in the future. Let me know. Also, check out our Cyber Monday deal at pollinatretrading.com. We got half off on all the courses, but more importantly, for the Trading Lab, which is a wonderful location. It's a Slack channel of fellow systems traders who we spend half the trading day, basically half the US trading day, on a live stream, trading currencies, trading futures, and mostly what we're focused on is getting traders live through the prop trading platforms out there. So FTMO, City, Traders Imperium, Funding Talent, 5%ers, Maverick, all the different prop trading firms out there. We're hacking the requirements to get into those so that you don't have to just jump in and try to, put a bad strategy in. We know the rules and requirements of those strategies, so we know how to size our positions. We know how to get the smaller, the time it takes to break it out. If it takes 45 days to get into one of the programs, well, we're not looking to hit the profit target within 3 trades. We're looking to do it over the course of a month or 2 months. That way you're not putting too much risk out there, and you're maintaining the requirement that they're literally asking for. So again, just destroy that like button. Be sure to subscribe and come check us out. If there's anything else, y'all, anything else in the world, you can reach me on the Twitters.